The Nigerian Exchange Limited all-share index surged 37.65% in 2024, closing at 102,926.4 points from 74,773.77. Market capitalization climbed from 40.918 trillion naira to 62.763 trillion naira. This performance follows a strong recovery since 2020, with the all-share index delivering a 283.45% return. While the first half saw record highs, the second half witnessed a rise in fixed income yields. Factors influencing this performance include mixed corporate earnings, government reforms, and fuel subsidy removal. Well, joining me to unpack this is Nabila Mohammed, banking sector analyst at Chapel Hill Denham Securities. Thank you so much for joining me today, Nabila.
Thank you for having me. Good morning and Happy New Year.
Good morning and Happy New Year to you too. Now, how impressive is a 37.65% return on the NGX, and what were the drivers?
So as you described it, indeed it was quite impressive, and I will just let everyone know that it is the fifth consecutive year that the NGX is returning positive at the end of the year. That's since 2020, 21, 22, 23, and it now we've recorded another positive return in 2024. And when we looked at when we did our analysis just to understand which stocks really contributed to these particular gains that we saw the ASI return at the end of 2024, if we're looking at it from a quarterly standpoint, what we noticed was that Q1 was the best performing quarter with 39.8% quarter-to-date return at that time. And the movers were largely Dangote Cement and Boa Foods that accounted for nothing less than 40%. Now, another quarter that performed very well in 2024 was Q4 2024, and we saw the likes of Seplat, WAPCO championing the movers of that particular gain in that quarter. So overall, when we did the analysis, what we see is that Boa Foods, Dangote Cement, Seplat, SL Africa all contributed around 60% of the gains that we saw the ASI record. So all in all, it is a good year. It was a good year rather for the NGX, for the equities market in general.
Interesting. You talked about Q1, but we of course knew what happened afterwards and why the all-share index started nosediving because of some of the news that came on about the banking sector and all of those. Now, talking about the final quarter also tried. Talk to us a bit about that. That's Q4.
So for the final quarter, we saw a lot of corporate-driven movement in the ASI. Seplat deal with MPNU was agreed. We saw the WAPCO announcement around the buyout of the largest shareholder. So all this forward sentiment in those news. And I believe that's largely why we see those two names top the list in terms of movers of the gains that we saw in the sector in the ASI in Q4. Now, aside that, we also saw investors taking positions in banking news, and all this resulted in gains in positive that the Q4 2024 recorded. So I believe it's a potpourri of factors that fueled the gains that we saw in Q4 standalone, and it's largely across these drivers that I mentioned: the fiscal policy of pronouncements, the corporate action by companies, the fact that investors were taking position in different banking news, given that they are anticipating mouth-watering dividends when their full year 2024 is announced. So all these are factors I believe that just fed into the fact that we had a positive Q4 ending supporting the Q1 2024 performance. Because when you look at Q2 24 and Q3 24 standalone, we did see some dips, and as you rightly said, it is largely as a result of the uncertainty that the capitalization exercise would bring. But as soon as we started to see clarity and started to see some of these banks come out to the market, in fact, beyond the banking alone, we did see some non-banks come to the market in order to address some issues that were presented as a result of the FX losses that they had in their books. We saw the likes of Nigerian breweries, we saw the likes of international breweries, and we also saw the likes of Cadbury that did some debt to equity conversion, all in a bid to address FX-related issues in their books. So I believe all these sentiments, all these actions taken by these companies sort of give the market the idea that these companies are actually working on the things that they are supposed to do, and there is some level of clarity with regard to capitalization, and we did see that turn around in Q4 2024.
Right. Thank you so much for that. That's quite robust, if you ask me. Now, looking at this 37.65% return, what does it mean for investors?
So, like I said, this is the fifth year that we are seeing a positive gain, and if you'd ask me, in those 5 years that have passed, we've had COVID, we've had devaluations, we've had change of government, and all these did not deter the equity market from returning positive at the end of the year. So I believe that investors should view this as a fact in such a way that the equity market is resilient despite this change in government, despite the series of devaluation that we've had, and despite the fact that we were even hit by a pandemic, which is COVID. In fact, I even forgot to mention one. We have the Russia-Ukraine war that sort of trickled down to emerging markets, African markets, and we saw rising inflation and high interest rates. So all these things happened in the past 5 years, and we still see that for the fifth year running, the all-share index is still returning positive. So I believe that investors should view it as the resilience of this equities market that we have seen over this period.
All right, interesting. Now, one of the things I thought would affect the equities market was the, hike in interest rates, but I'm not sure that we really saw a lot of that. Was it muted? What happened?
So I would say that that's the expectation, that with high interest rates, we should see investors will direct their funds to the fixed income market and just in search of higher yields. But as I earlier mentioned, there are a lot of things that really shaped the market, the equity market in 2024. We had this series of exercises going on. In fact, if you ask me, I'll personally say that the equities market was like the busiest market in 2024 with all the exercises that was going on, the recapitalization, the capital raising exercises by different companies aside the banks. We also had the policy pronouncements that also fueled some performances, like the likes of Sector, the likes of RDL. Now, in fact, RDL, just to even mention that there were listings on the NGX. We saw Transport Power also being listed on the NGX, and all these other things aside the high interest rate environment that we have redirected investors to other places that kept investors in the equities market. And because of this capital raising exercise, largely, we did see that retail participation in the equities market surged to around 80%, if I'm not mistaken. And it just means that the retail investors were more active in the market in 2024 versus the foreign investors. And all this kept the sentiment positive in the equities market despite the high interest rate environment that we had in the year as well.
All right. Now, market capitalization, we also saw that increase by over 50%, about 53 in 2024. I want to believe the listings sort of contributed to this. So looking at 2025, do you expect the recapitalization exercise of the banks to also add to the market capitalization in 2025?
Yes, I will put it this way. Once the banks are done raising their capital required based on their license type, we'll definitely expect some level of re-rating, because it will mean that their valuations will now be cheaper. Given how well they have improved earnings, valuations will now be cheap with swollen books because of the capital that they have raised. So it would warrant some level of re-rating in those names. But that would just be one part of the equities market. There are other aspects that we should also be looking out for. We should be looking out for more listings. In my view, I'll be expecting more listings probably in the oil and gas space. I would also be expecting a recovery for the non-banks, especially companies that recorded losses. If we see a sustained level of FX stability through 2025, we should see these companies plan better in terms of their FX exposure, and we should see that the capital that the likes of Nigerian breweries and international breweries have raised, we should see some level of recovery. So all these are other things as well, aside the banking capitalization that will make the bank stronger, that we should see going into 2025. So we have a lot of expectations. We are also positive that it will be a better year as far as all these factors that I listed are concerned.
Right. The insurance sector emerged as the best performing in November, but when you look at the full year 2024, it's emerged as the second best. I'd like you to talk to us about this. Are there fundamentals or is there value there for investors?
So there is no doubt there's value for investors in the insurance sector. However, I must highlight that if you look at the entire index, that's the insurance index, from a market capitalization standpoint, it's less than 2% of the entire market cap. And what this simply means is that there is value elsewhere as well. So from that standpoint alone, I would like to say that in as much as we've seen it perform the way it did in 2024, largely as a result of some announcements around their plans to recapitalize the insurance sector as well, just like the banks, which saw some of these insurance stocks gain as much as they did. There is still value elsewhere because just to remind us all, the ASI is market cap based. So the stocks that actually pull their weight from a market cap standpoint and not necessarily the insurance stock. That being said, we recognize the progress that we have made in that insurance space, even though there was this idea or ideology that companies may not necessarily want to cut down on their insurance expenses, but we did see that at the end of the day, it was good as well to have insurance covered across your business because of the uncertainties that the macroeconomic climate can present. So there is value, but I would say not as much as the other stocks on the NGX that pull their weight from a market capitalization standpoint.
For you, which of the indices would you go for? I know that oil and gas emerged as the best with 160% gain, but I just want to leave it to you. Which would you take as the one that has the most value for investors and backed by fundamentals?
So, like you said, the oil and gas sector is definitely one of them. We also have the banking as well. That is one of the indices that is backed by from a valuation standpoint and fundamentally driven as well. So these two sectors, especially with the things that we have seen happen in the respective sectors and how they have performed and what we expect them to do going forward. These are two sectors that investors should really be looking out for. Now, the telcos, though they are not necessarily, they do not necessarily have an index based on the NGX breakdown. They are also another list of stocks that Airtel Africa and MTN that I believe investors should look out for because there are ongoing talks around tariff increase, and if that should materialize, it should be a turning point for these particular telco companies. So that is also another sector I believe investors should look at. Now, for the consumers, as I earlier mentioned, FX stability is crucial to their performance in 2025 because they will be able to plan better their expenses as well as their FX-related obligations and how they pay, and how they just service those obligations at the end of the day. With this stability, they should be able to manage their expenses along that stability that FX presents, and we should see some level of improvement. And for the ones that have raised capital, we should see some turnaround as well in their performance in 2025. So these are the sectors I believe in that order investors should be considering in 2025.
Interestingly, when you look at the top 5 that we track here, the 5 indices that we track, banking sector sort of emerged as the worst performer. But of course, you said you sort of picked it as one of your best. Now, talk to us. Are there outliers that sort of did very well in that sector? Talk to us about them.
So if we're looking at it from a share price performance standpoint, we have the likes of Fidelity that really shocked the market with around 67% year-on-year return. We're looking at how it performs through 2025. And it's not surprising because it actually recorded the highest net interest margin across the banking names with the double digits as early as 9 months in terms of their performance. And this is remarkable. We also had the likes of GTCO in terms of, from a fundamental performance standpoint, that recorded $1 trillion in profit before tax as early as H1 2024. So these are some of the outliers. And it's just really the understanding of how this valuation of this bank plays. Because investors really understand that with post the recapitalization exercise, these banks will be stronger to carry out their business of lending to critical sectors of the economy. That will translate to more gains for them, more profit for them. And when we see more profit, it would mean that the banks will be able to improve on rewards to their shareholders in the future. So that should be really the understanding of how these banks operate. And I believe investors should start factoring that into their understanding of the valuation of these banks, because going forward, we should see some level of re-rating post their recapitalization exercise.
You mentioned the consumer goods and industrial sector briefly, but I would like you to say one or two things about those sectors, looking again at the outliers.
So for the consumer goods, I'll start by saying that we like what some of the brewers did. The fact that they came out to raise capital in order to address the losses that they've been booking in their books, and that just signals something to the market that these companies are out to change the tide or change the narrative in regards to their performance. So I believe Nigerian breweries and international breweries are the outliers from the brewer's standpoint. Then if we're looking at the likes of Cadbury, the likes of Unilever, that really, despite the harsh economic climate, because of for Unilever, for instance, the leveraged balance sheet that it has just sort of supported the fact that it posted profits better than what its other peers like the likes of Nestle were doing. We also saw Cadbury come to do a debt-to-equity conversion. So all these were really companies that stood out for me in the consumer goods sector. Now, for the industrials, we did see, despite the fact that they remained profitable, we did see slower growth, and we understand that it's largely because of how the harsh economic climate, as well as seasonality of their businesses, like the cement guys, the Boa Cement, the Dangote Cement, as well as WAPCO. WAPCO's performance, we know that it is largely because it is leveraged in terms from its balance sheet standpoint. We did see the likes of Dangote Cement remaining strong, largely because of its Pan-African business. So I would say that in a general, maybe industrials did perform better than consumers, because we still saw them return profits, unlike some of the consumer names like the likes of Nestle that still recorded a loss, and we still have to return profits in order to wipe out whatever negative retained earnings or negative equity that they currently have. They also did something, I think they did some level of readjustment in their capital structure. So, but that didn't really translate to much. So we still expect to see what they will do in 2025, and should the FX stability, remain sustained, as we have started to see, as we saw towards the end of last year, rather, even though yesterday it opened at a level that it started with a depreciation. I'll put it down. We expect that it will be somewhat stable, and these companies will be able to set up plans for their business.
About that. So let's look at, this. We saw a couple of stocks that sort of recorded full-year returns in 3 digits. I'll limit this to the top 10 returns based on share price. Now, Julie is number 1 with over 1,600%. But for me, if you ask now, say the investors are probably stuck with it, as there hasn't been any movement in its share price over 3 months. Now, apart from that particular stock, which of the other 9, stood out for you in terms of value for investors?
So one stock in the top 10 performance stocks that really stood out for me, it was nice that Julie recorded that much high in terms of performance. One other stock was Owando for me, because we did see that particular started to report financials as it showed, and we saw the strong earnings that continued to report or release on the NGX. And I believe that if that is sustained, we definitely see some reward come to shareholders at the end of the day. Aside that, there was also a transaction that was approved for one day. So all these spurred sentiments in that name. And just yesterday, we saw a news by the NGX saying that one day will be added to the NGX 30. So it's just something that really stood out for me in terms of the top 10 performers. Owando PLC, I hope they intend to continue in that trajectory because it will translate to reward for shareholders at the end of the day.
But apart from Owando, isn't there any other one you want to talk about? Or maybe I should start with Sunu Assurances because I was particularly shocked. But of course, looking at what you said about the insurance sector, when I asked about value and all of this, I mean, I have that sentiment also. But I would still like you to talk to us about what drove that sentiment or that movement that we saw in Sunu Assurances, especially in the last month of the year.
So for Sector Assurance, we do not cover the company particularly, but what we know based on facts is that they were quite interested in their performance at 9 months 2024. In fact, we did see a 145% year-on-year increase in profit after tax, which is quite remarkable for Sector Assurance because that's like the highest we've recorded in we're looking at that exact same period in the past 2-3 years. And aside that, they were able to, reduce their impairment losses in 9 months 24, which is difficult for most companies to do, especially with the harsh economic reality. We definitely see some companies booking more losses or booking more impairment, but Assurance was able to turn that around despite the harsh economic reality. So I believe all these just fed into the positive sentiment that investors had towards the stock at the end of the day, in my view.
All right, so generally speaking now, I mean, for people who just want to get into the market, and what would you tell them to look out for? Value, fundamentals? When you talk about fundamentals, Sunu Assurances probably has it with what you have just said, but in terms of value, does it have it? I mean, looking at all of this, what would you say to an intending investor who wants to get into the equities market?
So I would say an intending investor that wants to get into the equities market, first of all, they should really understand that our equities market is market cap driven. So sometimes you may see that you're invested in one stock and it is gaining, but the market is losing and you're wondering what's going on. But at the end of the day, it just boils down to you looking beyond the fact that it is market cap based and looking at the stocks that are really going to be valuable to you from a return or a reward standpoint. So you should be looking at stocks that are doing well, thriving with the current realities. You should be invested in them, be invested in the likes of banks. You should also be looking at, aside the banks, you should be looking at the recovery or investing in the recovery stories that the consumer goods sector is likely to present in 2025, because we have seen most of their share prices tank as a result of their poor performance on the back of the FX losses that they booked. But it also means that when we start to see sustained level of FX stability, we should see a re-rating in some of these stocks, and we don't want to be an investor that is left behind when that recovery happens, because it will mean that you do not buy the dip, which is when the stock price is actually at this level. So I believe that these are some of the things that investors should also look out for. And we've seen time and time again in the first quarter of the year, aside, if you bar any strategic investor involvement in price performance or in share price performance, we've seen that investors really try to take advantage or take position rather in certain names ahead of positive results, ahead of better than expected dividend announcement. So that rally is expected in the first quarter at least, and we know the companies that we know the stocks that would likely do this in 2025. So all these are things investors should look out for. Look at the valuation of the company, look at the performance, the fundamental performance, understand the kind of business that these companies are really into, and also be in stocks that are the free float is high, because you don't want to be in a stock that will not be able to sell quickly because there is no one that is willing to buy from you. So free float is also of utmost importance for new investors in the equities market. You should be looking at stocks that actually have high free float, than stocks that actually have low frequency. So all these, I believe, are factors that investors should consider when trying to invest in the equities market in 2025.
All right, thank you so much. I was going to ask you your outlook for 2025, but I think you already did justice to that. But just in case there is something you haven't mentioned in less than 30 seconds, let's have your outlook for 2025, the equities market actually.
So for the equities market, we expect a positive performance, and it will be driven by a number of factors: performance, better than expected results, and dividend announcements. We also expect that there will likely be new listings, especially probably in the oil and gas sector. So we expect a positive return as we have seen in the past 5 years.
Thank you so much, Nabila Mohammed, Banking Sector Analyst, Chapel Hill, Denham. Thank you for your time and thoughts on business.
Thank you for having me.